Arbor Realty Trust, a 8.5% dividend yield REIT. Is this a trap or is this a hidden gem? In this video, I will show you everything you need to know about Arbor Realty Trust. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. Please subscribe to receive multiple analysis every week. So, Arbor Realty Trust is a nationwide real estate investment trust and a direct lender providing loan origination and servicing for multifamily, single-family rental portfolios and other diverse commercial real estate assets. Headquartered in Uniondale, New York, Arbor manages a multi-billion-dollar servicing portfolio specializing in government-sponsored enterprise products. In this graph, we see the breakdown of the business. Arbor Realty is heavily focused on multifamily homes, with 91% of the portfolio invested in multifamily homes. Texas, New York, Georgia and Florida are representing more than 50% of the geolocation, and they focus on Fannie Mae services, sitting at 71%. So, I do own shares of Arbor Realty Trust, and it's a top 3 position in my portfolio. And to be honest, it's because of the dividends and the growth of this company, of course. Another thing which I really like is that Arbor Realty has a buy signal and an average price target of $20 a share with a high price target of $24 a share. The low price target is sitting at $18 a share. This is looking really good to me. But let's start analyzing the company before we put a buy sign on this company. Arbor Realty is an 8.5% dividend yield REIT with a market cap of $2.66 billion. And a PE ratio of almost 8. So the dividend yield is very high and we will talk about it later in the video. But the market cap is really low, so we're talking about a smaller company with a really low PE ratio. I have to say that REITs in general might have a lower PE ratio, but it does tell me that this company is trading below their value based on the PE ratio. REITs have a higher margin in general compared to other industries, and this is something we also see with Arbor Realty Trust. The operating margin is sitting at 64% and the profit margin is sitting at 51%. Really nice, and they really need this higher margin to have enough incoming cash to support the dividends. The management effectiveness is also really important to me. Return on assets is only at 3.3%, which is too low in my opinion. You want this number to be above 10%. The return on equity is sitting at almost 90%, which is fine by me. The 12 trailing months revenue is sitting at $661 million, with a revenue per share of 4.8. Both are fine to me and we will check the revenue per year in a second. The quarterly revenue growth year over year is sitting at 11.4%. This is really important to me. You want them to grow their revenue every year, also to support the dividends and the growth of the business. Net income is sitting at $370 million, and as we discussed the profit margin a minute ago, this is looking really good to me. Here we see the revenue and net income in million since 2010. We see some declines in net income, but ever since 2016, the revenue and net income grew both in a nice and steady way. So this comforts me a lot. You want them both to increase at a nice and steady pace and not a roller coaster pattern. The diluted EPS is sitting at $2.28. And has a quarterly year-over-year growth of 16.4%, so that's also looking really good to me. It's even higher than the year-over-year revenue growth. If we check the EPS of the last 2 years, we see they did beat them 8 out of 8. The revenue is beaten 7 out of 8 and only missed once. This comforts me a lot, because when they keep beating the analysts, the stock or company will eventually be rewarded for it. The next thing I want to discuss is the cash flow. This is really important because cash flow is used to pay down debt, pay dividends, buy back shares, do acquisitions and other things to grow the business. So, you want this company to have an increasing free cash flow which support all of that. When the free cash flow is too low, the growth of the business might be in danger. So, we see the operating cash flow, and to be honest, back in the years it wasn't looking that great. It's not consistent and also not growing at a steady pace. So this might be something to keep in mind. If we check the red box in the bottom, we see that the total amount of cash dividends paid. It's increasing every year in high amounts because they increase the dividends, but also because of the shares outstanding is increased as well. The more shares they issue and are outstanding, the more dividend they need to pay in total. So you want to keep an eye on this one, because this might be a problem in the future. On the other hand, free cash flow is growing in the last 2 years, so you don't have to worry right now, in my opinion. As mentioned a second ago, the shares outstanding are increasing. Arbor Realty Trust does issue a lot of new shares. In the last 5 years, they issued more than 180% of new shares. They issue shares to generate more capital, which they can invest back into the business. So it's not a bad thing necessarily for a REIT, but I prefer that the shares outstanding is at a more healthier level and they grow the business because of an increasing free cash flow. The next thing I want to talk about are the dividends. Right now, Arbor Realty pays a 8.5% dividend yield and has a PE ratio of just 62%. If we check the payout ratio breakdown, we see that it's based on this year's estimate, it's sitting at 88% payout ratio, and the next year estimate is sitting at 83%. For me, this is looking good. The 5-year growth rate is sitting at 17% for the dividends, which is quite nice for a company this small. They did grow the dividends for 9 years in a row, according to Seeking Alpha. Back in 2013, you received a $0.11 a quarter. Right now, you will receive a $0.37 a quarter, more than tripled in less than 10 years. That's really nice and impressive. This sheet also confirms that Arbor Realty Trust really likes to increase the dividend, so that's also a good thing. But the dividends are not the only thing that's really interesting about this company. If we compare Arbor Realty Trust with the S&P 500, we see that over the last 5 years, Arbor Realty did beat the S&P 500 and you almost got a 120% return in 5 years. There were only a few moments where the S&P 500 did a better job than Arbor Realty. For instance, if we check the 1-year chart, we see that the S&P 500 did a better job with a 15.6% growth and Arbor Realty only 6%. Another interesting thing about Arbor Realty is the major holders breakdown. The insiders are holding 11% of the total amount of shares. Institutions are holding almost 50%. The 2 biggest institutional holders are BlackRock and Vanguard. So it comforts me to see these big institutions investing their money into Arbor Realty. My conclusion is that Arbor Realty is a really interesting company. If we check the recent highlights, we see that they have a 50% increase of generated distributable earnings in 2021 versus 2020. They have 10 years of straight dividend growth and 7 quarters of a 23% increase in dividends, and also with the lowest payout ratio in the industry. And this is something a lot of people like about Arbor Realty. Their dividends are increasing every year and are also safe for the coming year. Arbor Realty claims to be the industry leader with a total shareholder return of 39% in the last year, 190% over the last 3 years and 221% over the last 5 years. They also claim that the 90% return on equity is unmatched in the industry and the continued strengthened funding sources are also looking really good to me. So, I think you have this really steady dividend paying REIT which is increasing the dividends every year, but next to that the ticker price also beats the S&P 500 in the last 5 years. We have to see if Arbor Realty is able to keep beating the S&P 500 in the coming years. I think when they are able to grow their free cash flow in even a more steadier way and keep beating the analysts in terms of EPS and revenue, this stock will definitely beat the S&P 500 in the coming years. As mentioned before, Arbor Realty is the top 3 holding right now, and I definitely buy more shares in the coming months. I really want to make them my dividend cash cow, but I'm keeping an eye on the cash flow to see if they are capable of paying the dividends in the long run and also to grow the business. For now, it's looking good for me, and Arbor Realty Trust is a buy. But remember to always do your own research and never fully trust on what I or other YouTubers say about the stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a video. Thanks for watching and I will see you in my next video.